Hello everyone, welcome today on our session on our webinar on the ESEF, the European Single Electronic Format. Today we will be providing you with some more information on the ESEF in general, so basically just a quick recap of what it stands for, but also with some more guidance on the new implementation phase, phase 2 of the ESEF, which will be text block tagging, which is, I assume, why you are all here. Our speakers of today, which are myself, Andres Hannibal. I am a manager at Finvision, and Lotte van Rollegem. She is one of our ESEF consultants who has also worked on most of our ESEF clients last year, so you might already know her. Logistics of the webinar today. All participants are muted. The webinar will last approximately 1 hour, which includes a little bit of time at the end for questions. But if you already have a question throughout the slide deck, feel free to address this to us either in the chat or through the questions function. There will be a short poll to evaluate our webinar afterwards, and it will also be recorded and made available afterwards on our website, so you might always come back to it later. The slides should already be available in the handouts function of the GoToWebinar, so you can already find these there. Maybe just for reference, our Finvision Academy IFRS series. So we have a number of IFRS webinars throughout the year. There are 2 more planned later this year. One is already next week on Thursday, the 1st of December, and will be on the IFRS updates and ESMA priorities for the 2022 financial statements. We also welcome you on Thursday, 15th of December, on the IS33 earnings per share webinar. For today, maybe a quick summary of what we will be seeing. So there's a little bit of slides on the scope of the ESEF. But also a recap on just ESEF and the IXBRL technology that is used in general. We will also cover where we are in the phased implementation. So we are in phase 2 currently there, but more on that later. And after that, Lotte will provide you with a more detailed overview of the updated requirements for this year and the update of the reporting manual, which has been done throughout this year. So let's start off here, the European Single Electronic Format. Which companies are in scope? I think most of you are from companies with shares that are traded on a regulated market. Obviously, obligations that are traded, for example, can also be in scope, but there is an exemption if you have really large obligations. For example, if you have more than 100,000 euros nominal amount per item, then you would be exempted. But that is generally only for the really big financial institutions. The ESEF requirements apply to the annual financial report. So currently they do not apply for press releases, the half-yearly financial reports, or anything other from non-financial information, governance statements and such. What might be important to remember is that the issuers have to prepare the entire annual financial report in the XHTML format. So in Belgium, it's not just the financials that are included in the annual report, but also a number of other documents. So considering that this is included in a single brochure that encompasses all these files and legal obligations, the full brochure needs to be presented in the XHTML format. Now, another thing on the scope is actually the tagging requirement. It's useful to know that the tagging requirement is actually a little bit narrower than the ESEF scope. So the XHTML format is actually applicable for all companies who are in the ESEF scope. If I go to the previous slide, that's basically all companies with shares traded on a regulated market. But the marking up is only required for entities that fulfill both conditions, which are IFRS financial statements, but also consolidated financial statements. So you can really distinguish two levels of details on the ESEF scope. The individual financial statements that use IFRS, those should be presented in XHTML, but the figures do not need to be tagged. Also, text block tags are not necessary here. Consolidated financial statements, which is applicable for most of you, I think, because you are in a group company. Those will have figures that are tagged, text blocks, and reporting in XHTML. Maybe a quick recap for most of you who are less technical on the ESEF and IXBRL technology that is actually used for this ESEF. So XBRL actually stands for Extensible Business Reporting Language. It's a free technology. It has multiple applications, and it has already been around for well over 10 years, I think. But for the case of ESEF, it's actually combined with inline HTML coding. Most of you know the HTML coding for the websites, let's say. Inline HTML coding allows you to embed information between the coding to provide some more details there. So why is this useful to understand? Very important here is that there is a single file which will be your official file. And for the digitalization, there's actually a machine readable layer with tags, and these are encoded in one layer of the document, but the human readable layer, which we see when we open the document on our computer, is actually identical. So there's a single file where both layers are combined. Very important for the auditors because they can then sign off on a single document so that you don't have any version problems, let's say. Maybe just to visualize this, an example of an inline XHTML document. The visual layer is just what we see when we open it. This is for the GLIFE, Statement of Comprehensive Income. They have, for example, fee revenues of 13.2 million euros. This looks and feels just like any other PDF you would open with a financial statement. But if you inspect the document and look at the coding, you will see the tagging. So there's fee revenue we have above here, indicated in yellow, but between the brackets, there's a lot of technical information that is already included. So the tagging here is an IFRS full tag on license fee income, fact number 8, numerical dot decimal. So a lot of additional information for the machines to read, but which is not presented to us visually. So really important that this is all in the same document. Maybe a second part on the technical requirements of this technology. You all remember that there are validations which can be performed. Most importantly, I think, when you are publishing the document, and you have to upload it on the company portal of the FSMA, there will be a number of predetermined checks that are done or validation rules that are enforced. Now, good to understand here is that an error should always be solved. Errors are for black and white situations where the software says, okay, this is not correct, you have to adjust this. On the other hand, the validations can also lead to warnings, and these always have to be checked manually. Just remember that just because something is a warning doesn't mean you have to adjust something. It's just an invitation, let's say, to look at it, make sure it is correct. And if it's actually correct, the warning in the file can stay and you can file as such. So you don't have to fix every warning you get here. Very quickly on the types of checks, there are technical constructs. I won't bother you with them, but dimensions, for example, every tag needs a dimension. That's just the technology behind it. Usually that's something that is done automatically by all software. One of the most given warnings is on the sign logic of debit or credit elements. Actually, all tags in the ESEF primary financial statements are intended to be positive. So an expense or an impairment, for example, that should always be included as a positive amount. So the technology only expects positive amounts. It might be that you have a reversal of an impairment, then you can include a negative amount. But because it's much less occurring, let's say, that's why you get a warning just to double check the sign there if you actually mean, okay, I have a negative amount here. Is it actually a reversal, or did we make an error on the sign? Calculation rules. May be useful here to stand still on it for just a second, because the fact that there are calculation rules which are enforced on your document sometimes gives a little bit of false security. Calculation rules are intended as a little check on, okay, we have some arithmetical links here. They always need to have the same result. So for example, subtotals, if you include them correctly, they will always be checked by the technology. What it was not made for is for a roll forward, for example. The technology cannot handle mixing different types of elements. So balance sheet items such as cash at the end of the year plus cash coming in throughout the year. You cannot check whether the sum of those two is actually the end result, which is the cash at the end of your year. So just know that calculation rules, you can check a lot of things, but not everything in your report. And I think the last two big type of checks are duplicates or empty elements, which are more technical of a nature here. Next up, maybe just on our phased implementation, what is the current status here? As you all know, last year we had primary financial statements, and these had to be marked up into detail. So income statement, balance sheet, cash flows, and just statement of changes in equity. This was 4 or 5 pages for most of you. As of the current year, so any accounting year starting on or after the 1st of January 2022, will also need to include the block tagging of both the notes and the disclosures. So in terms of pages, that's a lot more. It is with a little bit of a higher granularity, but that's something of a discussion point in a number of items. So this is also visualized by the next figure here. I think, primary financial statements, the detailed tagging was already mandatory in 21. The block tagging of the notes becomes mandatory this year. If you want, of course, more detailed tagging of your notes and all the amounts included there is allowed. It's voluntary, but it is allowed. But as we mentioned in scope, individual financial statements, you can tag these if there's an explicit taxonomy provided by the membership state, which is not the case for Belgium. So again, if you have individual financial statements, not consolidated figures, you are currently not yet allowed to tag the figures that are included. The same goes for the third country gaps, such as a Belgian gap consolidation you might have. You're allowed to prepare it in XHTML, but you cannot tag it with the IFRS taxonomy or the ESEF taxonomy. Next up are our 2022 financial statements, the updated requirements, where we will provide a number of more detailed and visualized examples of what the text block tagging is about. So for this, I will leave the floor to Lotte, who will enjoy you with this topic.
Okay, so as Andres mentioned, the next part of this webinar is more about the practical implementation of the text block tagging. So in the last year, all companies with ESEF obligations only had to tag their primary financial statements in a rather detailed way, as Andres already mentioned. But for the reports beginning on or after January 1st, 2022, the text block tagging will become mandatory. So as a result, the entire note section to the financial statements must be tagged with the so-called text block elements for the first time this year. But with this new requirement, some questions can arise. For example, what is a text block exactly? What should we consider as a text block? Do we need this interpret this literally, or and can we consider a paragraph, for example, as the lowest level of tagging, or do we need to broaden our interpretation and consider a page as a text block, and so on? Another question that can arise is, for example, what if multiple tags are applicable to one paragraph? So a lot of questions arise with this new requirement, and unfortunately, we do not have a real example to use as a guidance, but what we do have is the ESEF reporting manual. The ESEF reporting manual provides guidance on common issues that might be encountered when creating ESEF documents, and it explains how to resolve them. So it provides a series of concepts and rules to be followed. And the purpose of this document is to promote a harmonized and consistent approach for the preparation of annual financial reports. So it is a yearly updated document that contains best practices and examples, also clarification on a number of interpretation difficulties, and overall it's a more practical guidance. But very important to notice is that this ESEF reporting manual, it is not a legal document itself, but it just shows the preferred interpretation of this new requirement. So now that we know what the ESEF reporting manual actually is, we can ask ourselves the question on what are tax blocks tags exactly. Well, they are tags of a higher granularity of the detailed tags of the primary financial statements. So in other words, we do not have to tag, for example, the tables of the notes with the precision of tagging the tables of the primary financial statements. And these text block tags refer to sections or parts of a section, meaning they belong to either a full disclosure or a piece of a disclosure, or maybe even to just a table within a disclosure. For example, you have disclosure of trade and other receivables and the corresponding accounting policy, two examples of text block tags. Next, from the new requirement, we know that we have 252 text block elements in total, and they are split up in the following way. We have 132 text block tags that are used to mark up the disclosures, and 96 for the accounting policies. Then we have one to mark up the statement of IFRS compliance, and one so-called monster tag to tag the entire note section, and that is the disclosure of notes and other explanatory information. Further, we have 18 string elements and also 3 additional elements for detail tagging, and these are mandatory numeric tags that relate to dividends, as you can see on the slides in more detail. Then with this theoretical explanation, we will clarify this using an example. On the slide, you see some accounting policies and some disclosures out of a consolidated annual report. And here we have to attach the correct corresponding text block tags to the different paragraphs or the different notes. What do we have to do? Well, first we have the monster tag, the disclosure of notes and other explanatory information, and this tag is to be used on the entire notes section. This is the blue one that you see. Then second, when we go further, we can also attach the tag disclosure of significant accounting policies to note 1. And the first subsection after this, more in detail, we have the disclosure of basis of preparation of financial statements, and so on and so on. So you can already see that we can attach several text block tags to one paragraph, and this is called multi-tagging. We will explain this principle later on more in detail. if we go further with this example, if we go to the disclosures, for example, we see that the monster tag of disclosure of notes and other explanatory information is still applied, as this is always applicable to the whole note section. And further, we can also use the tag disclosure of financial income for note 2, and note 3 can be tagged with disclosure of finance cost, for example. Now that we have explained the more theoretical part, we will go on with a few practical examples. But before that, we want to give you a few key takeaways from the ESEF reporting manual. And that manual states that for block tagging, there is no completeness required. So this means that if you have a section in your annual financial report on which no predefined tag is corresponding to, then you do not have the obligation to create a company extension for this block tagging. So this is somewhat different from the detailed tagging of the primary financial, where you have an obligation to create a company extension tag if there is no predefined ESEF tag available. Then second, in case of a disclosure corresponding to more than one text block tag, we should attach both of those tags to the same text. And this is the multi-tagging. So you can have one text block where there are, for example, 3 text block tags applicable to. And third, the lowest level of granularity or the lowest level of tagging are the individual tables within one note. So it is not necessary to tag separate rows or cells within one table in the notes section. So we will go on with a few examples. First example is from the xbrl.org site, and here we have a section of the accounting policies. So if we want to tag this section with text block tags, we first have to attach the monster tag disclosure of notes and other explanatory information. And second, you can also see that the tag disclosure of accounting judgment and estimates and the disclosure of significant accounting policies are both applicable to the whole section on the slide. You can also see that in the headers, because the whole section is under section 2 and 2.1, use of judgments and estimates. And further, if we go more in detail, the subsection, for example, the first one in purple, measuring the fair value of financial instruments, can be tagged with description of accounting policy for fair value measurement, and so on. So this is an example of multi-tagging, as the same section of text can be tagged with multiple times with other text block elements. Another example, this is an example of accounting policies for tangible fixed assets. And here you can see that subsection 2.10 is already applicable to 3 text block tags. First, the monster tag, then more in detail, you have disclosure of significant accounting policies. And the accounting policy itself is taggable with description of accounting policy for property, plant, and equipment. So this is also a clear example of multi-tagging. If we go to the corresponding disclosure of it, we can see that this paragraph or this note is also taggable with 3 text block tags. But more important for this example is the granularity of text block tagging, because here in this table we see some general information about tangible fixed assets. But if you look more in detail, we also see some information about the depreciation of the tangible fixed assets. And as the lowest level of granularity for text block tagging are full individual tables, you have to tag the whole note with the text block tag depreciation and amortization expense, even if just 1 or 2 lines of this table mention the depreciations of it. So it's very important you always tag the full table. We go on with another example of multi-tagging and granularity. And here, for the above example, we see that for the accounting policies of interest, costs, and income, even more tags are applicable. For the subsection 2.6, we have already 3 text block tags. And concerning the disclosure, so the second example on this slide, we can also attach 4 text block tags to this one subsection, namely, again, the disclosure of notes and other explanatory information, and then 3 more specified tags: disclosure of finance income, disclosure of finance income and costs, and then disclosure of finance costs. And here again, it is important that you attach those 3 tags to the entire note, as the note only consists of a table, and yeah, as lowest level of tagging is the full table. So it's not the case that you have to attach, for example, the tag disclosure of finance cost to just the 3 first rows, because only those rows mention the costs. No, you have to attach the tag to the full table. But then, of course, with this principle of multi-tagging, you can ask yourself the question, how far should we go and how far can we go into this block tagging? Because, for example, in this case, we can attach already 7 tags to one particular node. And then the question is, are these all equally relevant, or are they even all slightly relevant in this story about text block tagging? Because I think the aim of text block tagging is creating consistency across different annual reports. And if you go that much in detail, maybe it's not the case anymore. We have 3 more examples for you. So this one is about the accounting policy of intangible fixed assets. Here, this subsection 2.11 is tagged with 4 text block tags. Of course, the first one, again, the monitor tag, then the disclosure of significant accounting policies, and you have 2 more specific tags, description of accounting policy for intangible assets and goodwill, and you also have the description of accounting policy for intangible assets other than goodwill. If you look at the corresponding disclosure of it, we see that we have also 4 tags applicable. And with this example, we want to show you that we think that you can use both text block tags, so the disclosure of intangible assets and goodwill, and you also have disclosure of intangible assets most of the time other than goodwill. Some might think that you cannot use that text block tag because we just have intangible assets in this example. We do not have goodwill. But we think if you use the principle of multi-tagging, then this tag is also slightly relevant. So we have to use this tag too on this example. And then we have the last example. Yes, and this is a more general example. And for this case, we will use a description of accounting policy for share-based payments as an example. And to begin, this ESEF reporting manual states that in case of a disclosure corresponding to more than one element of different granularity, we should multi-tag the information. So with this information in mind, we have summed up a few text block tags that we think that could be attached to such a note. First, for sure, you have to attach the disclosure of notes and other explanatory information to such a note, as this is applicable to the whole note section. Then second is the tag disclosure of share-based payment automatically applicable to such a note, or should this depend on the case, on the unique note within your annual report? Then third, such a note might be taggable with description of accounting policy for variance, but this is also dependable on the case. Then further on, you also have a text block tag disclosure of expenses. So might this also be corresponding to such a note? Yes, actually it might be, but then you can ask yourself the question, does this note, so the disclosure of expenses, does this add a lot of value to the reader of the report? And if you go further, does this tag, because it's really general tag, does this tag really add some more value to the reader at all in your report? And then some other text block tag that we think might be applicable to such a note is the description of accounting policies for employee benefits. Here, for example, if you only give share-based payments to your employees, then you could think you can tag it with this tag. But here you have two options to take in mind, because you can make your decision based on the ESEF taxonomy label, for example, but you can also think about the IFRS definition of it. The ESEF taxonomy label states that employee benefits are all forms of consideration given by an entity in exchange for services rendered by employees or for determination of employment. So if you take this into mind, then you think, yes, I can use this text block tag to attach it to the note of share-based payments. But if you take into account the IFRS definition, then you could say that this is not really in scope of IFRS 2. So the outstanding question here is whether you should look at the IFRS definition or the ESEF taxonomy definition if you want to apply the text block tags to a note, and which one of the two matters the most. So with this example, we wanted to show you that the text block tagging is not always that easy or straightforward than I think everybody thought in the beginning, and that you really should take a good sight of your annual report before start text block tagging. And then with that in mind, we think that a hierarchy of the taxonomy could help with this, because how do we apply this text block tagging practically? We just scroll through the entire list of the block taggings to the list of the taxonomy, and we decide for each element separately whether it applies to a text block or not. So we think that this is somewhat unfortunate, because the taxonomy list with the text block elements is just a flat list. There is no hierarchy in it to, for example, link some broader and some more detailed tags to each other. And such a hierarchy would help, it would make tagging a lot more efficient. For example, on the slide, you can see some small kind of hierarchy we made for ourselves. And we think, for example, if you have to tag the note concerning financial results, you could just use the tag disclosure of interest income, and then you would immediately see that the above tags are most of the time also applicable to the note of financial income. So then the tags, the disclosure of interest income and cost, one level higher, and then the disclosure of finance income and expense would be attached automatically to that note. So we think this would be a huge advantage, because then you could not forget or overlook some tags while scrolling through the taxonomy list, and the level of completeness would be much higher. But unfortunately, this is currently not included by the ESMA. Next, we have two more principles of text block tagging. First one is a voluntary text block tagging. And this can be used if you have, for example, a note or a paragraph. For example, here 1.3 adoption of new standards. And we see that for this subsection, we do not have a predefined ESEF tag. So then the ESMA recommends that you add a voluntary ESEF tag to that paragraph, and in this case it is disclosure of initial application of standards and interpretations. So if you do have some text where there is no predefined tag available, you can just take one from the voluntary list and tag your text with it. And then the second principle is continuation of text block tags. And these are used in cases where multiple pieces of text that do not follow upon each other correspond to one text block tag. For example, here in this slide, you have a note of finance income where the accounting policy of finance income and cost is explained. And when you go further in the annual report, the same accounting policy is explained more in detail. So then you have to tag this also with the same text block tag. And as you can see on the slide, this will be tagged automatically then with continuation tags. Then if we go further, this new requirement also has one technical limitation with it. And as Andres mentioned before, if you go to the IXBRL viewer, you have here on the slide on the left side, you have the HTML view, and that is human readable. So you see the table and the layout of the table. Then if you click further on the XBRL tag, you have the fact value. And if you go further to the coding, we see that this table is actually a flat list. So the structure of the table itself is gone and the output is just flat information. The ESMA recognizes this limitation in the technical construction of block tagging, and until transformation mechanics are further improved, ESMA recommends that issuers have to follow the guidance to ensure better resemblance of the tagged fact with the human readable report, because it is important that the human readable document is has the same information as the machine readable document. So this guidance states that the words and numbers have to be presented in the same order. So if you look at the human readable part, the left part of the slide, where you have the layout of the table and the coding, the words and numbers have to be presented in the same order, and also that you need to have some spaces between the data. So if you look at the right part of the screen, this guidance is followed by us. And then, but of course, you do not have, if you go to the coding, you do not have the layout of the table anymore. And this is currently a discussion point. If you have to present the table information with layout or not, and we expect that this year the IXBRL output could be presented as a flat list, as you see on the screen, but that this will change for the following years. In the next slide, you also see some example of it. So you have on the left side the extracted XBRL instance, and then the right side we made it human readable in Excel with the spaces and with the correct order of words and numbers. If we go next, with as with every legislation or new requirement, there are some discussion points on the practical implementation of it, and we filtered 3 major discussion points to bring them up to you. First one is granularity of the tagging, and this discussion point states that the tagging should be limited to the granularity expressed in the document. So this means that you do not have to tag separate sentences, separate words, or separate rows in a table or something. Then the second discussion point states that for accounting policies presented in a separate section of the financial statement, that a minimal approach should be followed, and the accounting policy within the corresponding disclosure should not need to be tagged. So we think that when you have accounting policies presented in your actual disclosure, it might be better to relocate the section to the section of the corresponding accounting policy, because otherwise your report will consist of several small continuation tags across your report, which might not be very user-friendly according to us. And then you have another discussion point concerning the headers. And with this discussion point, we understand that tagging the headers gives no additional information to the user, as a tag itself has already been given a specific role within the taxonomy. For example, if you go to the IFRS viewer where you tagged your entire note section and you scroll above one of your tagged paragraphs, for example, then you can see the sort of tag that you used. So the tag that you used as already sort of header, so it is not really necessary to tag your headers as well. But of course, it can be useful to tag the headers, but then important to notice, this should never conflict with the tag used for the corresponding paragraph. And then another discussion point are some taxonomy elements without clear use, by which we mean that some taxonomy elements within, so that some taxonomy elements are not really likely to be used in your annual financial report. For example, the first one, you have disclosure of consolidated and separate financial statements. We do not think this will be much used because the ESEF reports are only for consolidated financial statements and not for separate financial statements. And for example, if you take the second one, disclosure of interim financial reports, reporting, we also think this is rather unlikely to use because ESEF reports are not for interim financial reports, only for annual financial reports. So as a result of this practical part of the webinar, you can also probably think that there are a few difficulties in practical implementation, and yes, according to us, they are, because first, the expected content of the tags is often unclear. Then second, the definition labels are not sufficient to understand the expected use of the tag. Remember the consideration between the IFRS definition and the taxonomy label that you need to think about if you attach a tag to some text. Then third, the completeness level is hard to judge because how far can you go and how far do you need to go in the principle of multi-tagging? And fourth, the practical use of the tagged information is rather vague because if you do not really know for what purpose the tagged information will be used, then it is hard to decide the level of multi-tagging and the level of materiality, as we do not really know which factors are important. For example, are we applying multi-tagging too much in detail now or not? We cannot really say because we do not really know how this tagged information will be used in databases, for example. So as a general result, we think that the first time implementation, so this year, will be based on a lot of judgments. And to finish the practical side of this webinar, we have also some other updates and clarification of the reporting manual, because the update of the reporting manual does not only treat text block tagging, of course, and I will explain them very shortly to you. First, we have the update of the reporting manual, and that confirms that the ESEF is the only official annual financial report. So it is also very important to upload this version to your company website. Then second, you have a list we have a list of 252 text block taggings. So then it is rather logical that you do not use all of these tags in your annual report. So, or not all of these tags are applicable to your annual report. So you do not have to tag these unused tags to, for example, some empty fields on your report. If the text block tags are not applicable to your unique financial report, then you just do not have to use them. Further, if you have dashes or empty fields in your reports, you have two options. If it represents 0, then you have to apply the corresponding tag, but if it just represents not available or nothing, then you do not really have to tag it. If we go further, you have duplicates. Last year, when tagging the primary financial statements, you could not have duplicates. And with text block tagging, you cannot have them too. So you can actually use the same text block tag multiple times, but then the text must have a different meaning. Same as with the more detailed text for the primary statements. And then last, issuers are not longer allowed to override or replace standard labels. So because an important principle of ESEF tagging is that the machine readable part of the report has to be the same as the human readable part, as we mentioned before, so you cannot override the predefined labels of the ESEF taxonomy with your company extension labels, because otherwise the aim of consistency across different annual reports would not be applicable anymore. So with this, I will give the floor again to Andres, who will explain you some more things.
Thank you, Lotte. So very shortly, just to close up our presentation, I added 2 appendices to the presentation. The first one is actually with just some useful links and documentation. We often use these documents. It might be useful for you if you want to know something more about this. The first 2 are xbrl.org websites. Actually really useful. Remember, XBRL is the technology actually that is being used. They often have news articles on the interpretations of the ESMA or other useful insights. If you're looking for some examples of ESEF taggings, well, there are currently no textbook taggings available yet, but will become so very soon after year end. Filings.xbrl.org is an excellent website for that. It's actually a third-party collection that downloads and makes available freely to the public a number of these ESEF filings from the central data registers. So very useful also if you have other companies you want to research their ESEF version, especially if they are abroad in another membership state. Amana, 2 links. One on the white paper with the text block tagging changes, very useful stuff there. Also a user manual on their XBRL tagger, the software we use. They do explain a lot more on multi-tagging and just their view on how to interpret some of the things, and obviously also how to apply it in their tagger. And maybe just the FSMA Q&A, but also the ESMA reporting manual. They both have a lot of clarifications on textbook tagging in general, but also on another of other factors such as which language versions have to be tagged, and so on. So just share the links if you want to look up certain items in a discussion on this. And yeah, just to close out the legal references, I have a standard list of these, which you see above here. Part of this, the European legislation is actually transposed into Belgian law. Some authoritative guidance from the FSMA circulars on these matters, and just the general ESEF regulatory technical standards. So very useful if you have a really detailed question or problem and you want to go back to the source if you want to make your own interpretation on certain items. I think we are good on schedule here, so we're a little bit before time. We still have 8 minutes to go, so I would love to hear a few questions if you have any. So I'll give everyone 2 minutes if you have any questions to type them out in the chat or in the question box. Maybe while you are all doing that, I always like to take this moment just to still give you my personal opinion on the text block tagging, which is it's proven a lot more work than everyone initially expected. The market expected text block tagging to go fairly smoothly, but because the target here, the goal of the text block tagging is a little bit unclear. Yeah, the way we need to interpret all the ESMA guidelines are also a little bit of a moving target. So just know that there's a lot of judgment involved. The granularity is also subject for discussion with a lot of people. So I would advise everyone to start early on this. If you need to start with this in March or April, you're going to have a lot of discussions and a very busy time with deadlines. So yeah, try to front load all of these discussions into December, January, because most of your annual financial report will not change in such a big way, let's say. The text block tagging can be transferred quite smoothly from 1 year or from a dry run version to the final version. So I would advise everyone to start on this quite early on, which would be probably now or in the coming weeks. Unless mistaken, we haven't received any specific questions here. If you do think of any, feel free to let us know, and we will answer as best as we can. Maybe just a quick reminder on the upcoming webinars for our next sessions. So the ESMA priorities and also the earnings per share in the month of December. So after that, there is nothing left for me to do except thank you for your attendance. And oh, wait, I understand there's one question maybe. Lotte, can you read it out loud for me maybe?
Yep. The question is if there is a text block tagging or a tagging in general for ESG reporting.
Actually, no, I'm not aware of such a tag. So the way the mandatory tags are structured is that there's a predefined list of all these tags and you have to check which ones are applicable. The list of mandatory tags was created already some years ago, I think at least 5 or 6 years ago, and then it was just waiting on the European legislation to be voted and approved, let's say. So ESG reporting is not a separate text block tag. However, it's obviously an important part of your financial reports. You might want to indicate it, but it will probably not be part of your ESEF scope itself. I think it also depends whether you present the ESG reporting part as part of your annual financial report itself, because the ESEF scope, even though the full document needs to be presented in XHTML format, the tagging itself, it's only applicable for the contents of your financial report itself, so the consolidated financial statements. So I believe that is also one of the reasons why there is no ESG part of your financial statements that can be tagged. If it would be part of your annual financial report, or you make a reference to it in the consolidated financial statements itself, the option to make an extension and just make your own textbook tag with ESG reporting reference is certainly allowed. So that can also be a solution to the problem there. Okay. Again, any other questions, feel free to contact us and we will try our best to answer if the knowledge is already there or the interpretation. Thank you, everyone, and have a good day.